Right, scenes of relief and celebration greeted the Cyprus Parliament's rejection of a tax on bank deposits. The one-off levy linked to an EU bailout deal would have seen millions of account holders lose up to a tenth of their savings and had been condemned by officials and the public alike. But the country now finds itself on the brink of bankruptcy, and having rejected the EU's terms, it may have to turn to Russia for assistance. Yegor Piskunov picks up the story.
Cyprus is in a very difficult position right now since it's just rejected the bailout plan by Brussels and the troika of key investors to tax private bank accounts in Cyprus. And frankly, there aren't that many places to turn to right now for assistance. The Cypriot Finance Minister is in Moscow. He's met with his Russian counterpart, and he's said that he's satisfied with the negotiations, but at the same time added that no official offer has been made so far, although there is speculation that Cyprus is going to ask Russia for a loan. But we do know that the country already owes Moscow 2.5 billion euros. This is for another loan which was given to the country back in 2011. Back then, it exceeded 10% of its GDP and helped its economy stay afloat. But the big question now is Cyprus going for broke? Is it going to ask Russia for a complete bailout package? But the big picture is Angela Merkel is completely furious with Cyprus even talking to Moscow about this, even though it's widely acknowledged that up to 30% of deposits on Cypriot bank accounts belong to Russian businesses.
Banks throughout Cyprus remain shut to prevent panicking investors rushing to withdraw their savings. Our correspondent Tessa Celia reports from the capital on the situation facing people there.
As far as what goes on in the street at the moment, it's rather calm. The initial panic really happened over the weekend when that announcement was made from Brussels that they will be taxed. So people were lining up in front of ATMs trying to get their money out. And yesterday, I was talking to some locals who were trying to get some money out from the ATMs. Some had run out of cash. And this morning, when I actually tried to buy a bottle of water, they had given me a handful of change and apologizing that they had run out of €5 and €10 notes because the banks were closed. The UK government, as we know, had already sent about €1 million in cash to their troops who were here in Cyprus just to keep the cash going. Now, on a bigger level, an economical level, if the banks do remain closed, this will pose a problem as the economy does hinge substantially on the banking sector. And there's already been doubt on whether the banks will open at all. And we also heard from reaction from the EU. The Dutch Finance Minister said, well, the bloc deeply regretted the vote, but the bailout offer still stands, provided that the initial requirement is still met. Obviously, that has not passed in Parliament, and they're really not happy about that. Well, the impact of what is happening in Cyprus certainly sending ripples across Europe. First of all, to the citizens who are now quite afraid of their savings in the bank. The seeds of doubt have been sown. The credibility has been damaged. In fact, the damage has been done even if the vote did not go through. So people are saying if it could happen to Cyprus, then that red line of being crossed, of dipping into people's savings, it could happen to other Eurozone countries that might be needing bailouts in the future.